ANEXT Bank's loan book surged 281%, highlighting how flat pricing is reshaping inclusive SME finance across Asia. To understand the technology driving this credit evolution, we speak with Philip Tan of ANEXT Bank. So Philip, in a competitive funding environment, why does lending quality matter more than deposit growth?
Deposits are obviously important because they are the funding base that allows a bank to grow. But I think the bigger question is what you do with those deposits. One thing I will highlight is that not all deposits are equal. We are not just looking for deposit growth. We are looking for stable, sticky funding rather than deposits that come in simply because we are paying the highest rate. Ultimately, though, sustainable value comes from how effectively these funds are deployed. And a quality lending book is built on understanding customers well, allocating capital reasonably, and supporting businesses that can perform through different economic cycles. I often say deposits tell you customers trust you enough to park money with you. And a quality lending book tells you that you understand your customer well enough to back them. So in the end, deposits provide the fuel, lending quality determines the returns.
With that, how can banks profitably serve cross-border MSMEs?
I think actually profitability starts much earlier than financing. Most business owners don't wake up thinking about banking. They wake up thinking about customers, suppliers, inventory, and growing their business. So the opportunity for banks isn't simply to provide financing when a problem appears. The real opportunity is to understand customer needs much earlier and become part of the customer's workflow. For a cross-border MSME, that could mean helping with collections, payments, foreign exchange, or cash flow visibility before financing is even required. And the more closely we understand how a customer operates, the more opportunities we have to support them across multiple financial needs rather than just a single transaction. And that's really where profitability comes from. I think it's about becoming relevant earlier, building a deeper relationship, and creating value well beyond the loan itself.
We would also like to know your take on this, Philip. Will embedded lending strengthen banks or push them into the background?
I think embedded lending is one of the most exciting developments in banking because it allows us to meet customers exactly where the need arises. It lowers acquisition costs, creates a much better customer experience, and gives banks a richer understanding of how a business actually operates. One interesting consequence is that underwriting also starts to evolve. Traditionally, it was based largely on historical financial statements, but as banks become part of the customer's workflow, underwriting becomes a much more continuous understanding of the business. Now that leads to more relevant solutions, better customer outcomes, and ultimately better risk decisions. The risk, of course, is becoming invisible. If customers only see the platform, then the platform owns the relationship and the bank simply becomes a utility behind it. That's why I believe successful embedded lending isn't just about acquiring customers through the ecosystem. It's about working together with ecosystem partners to deepen those relationships through banking. And when we get that right, customers receive better financial solutions, and our partners build stronger ecosystems, and everyone benefits. So acquire through ecosystem, deepen through banking.
Thank you so much for sharing your thoughts, Philip.
Thank you.
Once again, that was Philip Tan, Chief Financial Officer of ANEXT Bank. For more news, visit asianbankingandfinance.net.